Hi, this is Gavin McMaster from Options Trading IQ, and today we're going to be taking another look at how to trade volatility. The main way to track volatility is using the VIX index, which is the CBOE Market Volatility Index. You can see here the VIX over the past 12 months. And you can see that generally we've had a clearly defined low of around 15. You won't see the VIX getting too much lower than that. So whenever you see the VIX getting down to these sort of levels, it could potentially be a good time to start looking at getting long volatility. You can see here a big spike in the VIX that happened fairly quickly. From around Feb 18th we had a little spike followed by a major spike. This was the Japan tsunami incident that saw quite a lot of fear come into the market at the time, and you can see that volatility just spiked up very quickly from around 22 up to around 32 over the course of 2 days. So volatility provides some fabulous trading opportunities when you're trading options in terms of getting long or short vega. You can see with this spike, this would have been a fantastic time on this day. If you had have picked this top in volatility, it would have been a fantastic time to start putting on some short vega trades, and volatility just completely fell off over the next week or so. And again, pretty soon we were down around that 17.5 and down to the 15 level again. So you can see that if you've got a long-term view, when volatility drops to around 15, it's a very good time to be getting long volatility, and if you can afford to do that on a longer term time frame, you can see here that we had a massive spike up to 47.5, and we were elevated for an extended period of time. That would have been a great time to be long volatility if you had placed your trade earlier in the year and just been able to hold on and really profit during this period here. And then once you did get that spike in volatility, you could then look to take your profits on those positions, or if you didn't have any positions, you could look to enter some short vega trades such as your iron condors and your credit spreads. And then we see here that over the last couple of months, volatility started to drop off once again, down back around to that $20 level. So I think, if volatility does drop down to that $15 level again, that will be a fantastic opportunity to start looking at some long vega trades. One other thing to keep in mind when you're trading volatility is just because volatility, we get these spikes in volatility, doesn't mean that it can't go higher. For example, if we look back to 2008, we saw we had a couple of spikes up to around the $35 level, or the 35 level rather, and you see we spiked up to that level again, and then all of a sudden within a couple of weeks we'd gone all the way up to 90, which was just a huge spike, and really swelled those option premiums. So do keep that in mind when you are trading. Just because it's high doesn't mean it can't go higher. So in terms of actually trading volatility, it's very important that, as with all other aspects of trading, that you have a plan for what you're going to do in certain situations, and a set of rules that you're going to follow at all times. So here's just a brief couple of guidelines that might help you with your trading when you're looking at getting into volatility trading. So if the VIX is below 20, it's a good idea to be long vega. If the VIX is between 20 to 35, you could be neutral volatility. And if the VIX is above 35, you could start looking to get short volatility. So there's a couple of basic trading rules for you. You may want to play around with those yourself and adjust the levels, but those are some rough guidelines that you might want to use. Now you can see here the various option trading strategies and whether they're going to benefit from a rise or a fall in volatility. So I'll just leave that up there for a few minutes so that you can take a look and maybe take some notes. Okay, so thanks very much for watching. Again, my name is Gavin McMaster. I'm from Options Trading IQ, and if you want to learn more about trading volatility, head over to www.optionstradingiq.com, and I look forward to talking to you soon.